When the stock market crashes, the first instinct for many investors is fear. Watching your portfolio's value fall rapidly can be nerve-wracking, and it's natural to think about selling everything before it gets worse. But this is the very moment when staying calm becomes your most powerful strategy.
Panic selling often turns temporary losses into permanent ones.
Markets move in cycles, they rise, fall, and rise again. What feels like the end of stability is usually just a part of the natural rhythm of the financial world. Every major crash in history has been followed by recovery. The 2008 financial crisis, the dot-com burst, even the COVID-19 market crash all seemed devastating at the time, but patience rewarded those who held on. Selling during panic means locking in your losses, while waiting allows your investments time to regain value. The key is understanding that volatility is not your enemy, it's a part of investing. The market tests your emotions before it rewards your patience. In times of turmoil, it's important to look beyond the red numbers. Ask yourself, are the businesses you've invested in still strong? Are they generating products or services that people continue to need? If the answer is yes, then their stock prices will eventually recover. The value of a good company doesn't vanish overnight. What changes in a crash is sentiment, not substance.
This is where long-term investors find opportunity.
When quality stocks drop in price, they're essentially going on sale for those with courage and foresight. However, it's also important to be realistic. If you need money soon for essential expenses, or if your investments are heavily concentrated in one risky area, rebalancing may make sense.
That's not panic, that's strategy. But selling everything out of fear?
That's emotion taking the wheel, and emotion rarely drives you to wealth.
Financial crashes are temporary, but bad decisions made in panic can have lasting effects.
The truth is, successful investors aren't those who avoid every downturn, they're the ones who endure them. Waiting through the storm, even when it's uncomfortable, is what allows you to benefit from the recovery that follows.
So, during a financial crash, take a breath. Don't rush.
Remember why you invested in the first place. The markets have always bounced back, and so will you, if you stay patient and think long-term.